If you have childhood trauma, you either go to jail or you become a CEO.
I should put that on a t-shirt. Today, I'm thrilled to have Chris Marlett. He's the CEO of MDB Capital. They are a publicly traded company on NASDAQ. How do you find which ideas to launch? How do you find these diamonds in the rough?
So what we're looking for is asymmetry to upside. So we're looking for something that doesn't take a lot of capital to get to a big inflection point. We look through thousands of ideas a year to find these companies that can be leaders.
They never went to IPO school. So what should they understand before they go down that route?
First of all, you shouldn't go public unless you really have something differentiated and unique, especially if you're not.
Good afternoon and welcome to the podcast. Very often when people ask me about IPOs and the public markets, our services run the gamut from New York Stock Exchange, NASDAQ, small cap, mid cap, micro cap. And when somebody says, well, how's the micro cap world doing? My typical answer is that it's another day in paradise. And so it can be paradise for the right people, the right companies, and the right circle of opportunity around them. And today, I'm super excited to have a guest, a friend that I've been working together with for over a decade, maybe closer to two. I don't know if we've ever met in person, but today I'm thrilled to have Chris Marlett. He's the CEO of MDB Capital. And as you're going to hear, MDB wears many hats, but one of those hats is that they are a publicly traded company on NASDAQ. And for those of you who just want to jot down the symbol, it's MDBH. And I think there's going to be a lot to learn about the capital markets and opportunities today from Chris. So Chris, with that introduction, a little long-winded, but thank you for joining us.
Well, thanks for having me today, Seth. This is fun to reconnect after all these years and start to get out and tell the story a little bit about what we do.
That's great. We'd love to help with that. I mean, we go back working with each other to the vintage filings days, which was from 02 to 07 in various different capacities. And I want to hear about that journey, both for you and the company. But before we backtrack, if you don't mind, tell me a little bit in your words today. What is MDB Capital?
MDB Capital, when we started, is we've done the same thing for basically 30 years. We've operated underneath a broker-dealer, so a lot of people think of us as an investment bank. But we're really a launch pad for the leaders of tomorrow, and that sounds a little bit lofty and a little bit aspirational. But I think it's really true in the sense that what we do is we curate these, what we believe are going to be the leaders of tomorrow. And we have a very disciplined and process-oriented approach to this, to where we look through thousands of ideas a year to find these companies that can be the leaders. We've tended to focus on deep tech. Deep tech is great, much easier to confer leadership because you can do that through intellectual property and you can own a space per se. And so we became experts in IP along the way. And we really roll our sleeves up. Most of the time we're licensing technology from a university, partnering with inventors and universities, and in some cases entrepreneurs that have already, have technology. And we're creating a company that we believe will live very well in the public markets. And in fact, will live better in the public markets than it would through traditional venture funding. So we call this whole process sort of public venture. And so we've been doing the same thing for a lot of years. We just did our 18th IPO, and it's, if we were just an investment bank, it wouldn't be very impressive. But when you look at it as being co-founders of these companies and really creating the company, it still amazes me that we've effectively created 18 public companies from in our history, and we're ambitious now and think we can increase that rate. So we've scaled up our capabilities with our team. We've trained more people, trained more analysts, trained more folks to help put these companies together. And we're trying to do 3 or 4 a year, and that doesn't sound like a big thing, but it's a huge thing because
and I have to point out for those that are listening, you say it very casually, but I think it's definitely worth noting. To have been around in the public markets for 30 years is a tremendous statement. I mean, you just mentioned it as, hey, we've been around for a while. it shows tremendous resilience, the ability to have pivoted and navigated through insane times throughout the capital markets. And I think that the other thing worthy of note is that I feel like the traditional theory of an investment banking firm very often is to knock out as many deals as possible. And the fact that, you have been so selective in curating these 18 companies over the last, many years, is a testament to really what you're looking for, not just looking to fund the next buzzword of AI or data center or something like that. And I saw someplace in your materials that maybe one of your mantras is launching big ideas. Is that right? So can you spend a second and just tell us, so how do you find which ideas to launch? How do you find these diamonds in the rough?
Sure. So what we found is that if you really want to be a leader in something, you got to really almost grow it from, a very small base, and it starts with, for the most part, intellectual property, and so it's how we're able to screen so many, let's quote unquote, big ideas. And so what we're looking for is asymmetry to upside. So we're looking for something that doesn't take a lot of capital to get to a big inflection point. So you're not investing in a phase 3 clinical trial that may cost $100 million and then you have a binary event or something like that. That we think that is not a smart way to invest in venture. And you know, so we look for technology that we believe fits that criteria where we can put in 15, $20 million and get to a big inflection point, meaning pharma will wake up if it's a drug or a device can get onto the market and show great promise. But we have to own the space from an IP perspective. So what we do is we scan through, you know, all the scientific journals. So scientific journals do a pretty good job of publishing breakthroughs, right? And so we look through those breakthroughs and then we go look at the IP and then we contact the universities or folks. We also get a lot of inbounds because people know what we look to do. And then our analysts go to, all the conferences like Bio and JP Morgan for, because we have a heavy concentration in life science. And so we're always just looking, I read Twitter just like anybody else, and I'll see a new breakthrough. I'll send it to the analyst team. We have a proprietary IP database, so we're able to very quickly screen, could we be the leader in this space if we possess that technology in a company, right? And that's how it all starts. And we've gotten, over the years, we've trained a number of analysts. We have 7, and they're experts, and they'll look at something, they'll figure out if it fits our criteria, they'll pick up the phone and engage with people, and then we'll start down the process of seeing we can do something with them. And then again, we get a lot of inbound stuff, but we're able to turn over thousands of rocks a year because we're first screening through a filter that I don't think anybody else really filters through, right? And it's like, if GLP-1 drugs are hot, right? Venture guys are saying, okay, can I be the 31st GLP-1 drug? It's like, we look at that and say, that's not leadership. To me, that's a monkey see, monkey do model, which is something's hot. So, you can see all the investment banks that are out there that, like we were looking at the VTOL market, which is these, basically drone helicopter things for people to fly around in, right? We looked at them and we just said, God, this is not a great asymmetric bet. It's like nobody really possesses any real technology advantage or anything else. No one's going to can be the pure leader in it, but doesn't stop from, everybody in some cases, the ones that we looked at are now trading at $1 billion values and a lot of people are funding them. Now, I don't think they're going to do well from $1 billion value, but that it doesn't matter. It is what it is. Stocks went up and they did well. And so we tend not to be trend followers. We tend to be
That's right.
trendsetters.
No, I love that approach. I think the other thing that clearly distinguishes you from many others out there is that you are, you're a practitioner. You actually execute on what you do from the standpoint that you yourself are a publicly traded company. So many so many service providers, bankers, consultants are experts on being public or IPO or SPACs or direct listings or what the case is. They've never done it themselves. And I hate to say I'm probably in that category, right? I mean, over 25 years, I must have worked with 5, 10,000 publicly traded companies, but I've never taken a company public. Tell us about why you decided to become a publicly traded company yourself, and how does that help you, or how has that journey been like?
Yeah, well, it's been a rocky start for us. So what happened, what was interesting was our last sort of grouping of companies that we formed and took public, we started them from ideas and took public. Before we went public, those three companies all went to billion-dollar values from ideas, right? So we're sitting there, we're saying, well, geez, we're pretty smart. This is easy, right? Well, and if you look back at our track record, these companies, 100% of the IPOs we had done, over the years had doubled from their IPO price or better. And, and people had an opportunity to make money. So our investors did well. Overall, these things are volatile, but still they all had an opportunity to make money. They all did, well, in some cases incredibly well. And so we looked at it and said, it was sort of an existential moment for me. I didn't have to work, but I said, well, what do I do? Do I burn the library, or do we, we did one company every 18 months. I said, could we scale this? And can I make myself irrelevant? That was the reason we took the company public, was how do we scale it? How do I turn it over to the next generation? I'm going to be 62 next month. And I just said, you know, I, I could, I could just go be chairman for hire. I can put money in companies and go do this in my sleep and spend more time with my kids. Or I can
You
turn
don't
it
look a day over 45, by the way, just for the record. For those of you who are listening.
Thanks. So basically I just said, listen, let's see if we can scale this, right? And so what was rocky about it is we went public in probably the one of the worst little micro cap, environments you could find.
How
We
long ago
saw
was that? How long ago was that?
2 years ago, a little over 2 years
2 years.
ago, 2.5 years,
Okay.
2.5 years. And so that was one part of it. The other part of it is that our companies haven't matured yet. So we love our companies that are now our new crop of companies, but they haven't turned into billion-dollar companies yet. And if they do, then there's huge leverage to our shareholders. But until they do, it's like, in our business, you're only as good as your last performance, right? And if you look back, and not that I want to compare myself to Warren Buffett, but you think back at all the years when all of a sudden Warren Buffett wasn't, performing, let's say in the internet boom and probably the AI boom or whatever, and all of a sudden they say, oh, he's lost his touch, right? Well, it's just he kept doing the same old thing, and he was like the turtle. He just kept going, and I kind of feel like we're the turtle sometimes. Like we just keep plugging away, trying to find asymmetric upside opportunities. And then, one day, you know, we had a company a couple years ago that got bought out that, the stock was, we'd taken the company public at 4, it gone to 20, came back down to like a 5 and change. It was going down, and everybody's like, oh, that company sucks. Chris is an idiot, or, the Fed being an idiot or whatever. Right. And, and and I was depressed, and the company had all their money at Silicon Valley Bank, and Silicon Valley Bank got taken over. I was catatonic, right?
It was like a perfect storm, right, right.
Yeah, and they had, and I'm just sitting there, and I'm just like, I don't get depressed very easily, but I was super depressed that weekend. And then on Sunday, the U.S. government, insured the deposits of Silicon Valley Bank, and on Monday the company got bought for $25 a share. So what happened was all of a sudden you go from being a goat to a goat, right? You go, it's
Right.
like,
A good
you know, you
story.
go,
Wow.
and so that's the story of our life, right? And so I don't get too emotional about it, but it's hard work, and I'm doing this for my team at this point, and we've started some great companies. That company, had a treatment to prevent or delay the onset of type 1 diabetes in kids, and we started another company that is now, that got bought by Pfizer for 14 billion that we took public at a 14 million pre-money valuation. And, that company, pioneered what is now the largest selling prostate cancer drug in the world. And so we've done some great things that have, helped humanity. And that's why I think we keep going. But I tell you, it's, the life of a microcap entrepreneur merchant bank is not for the faint-hearted, right?
I
It's,
hear you. I mean, I think it's a tremendous credit to you, even listening to you. The average person out there would just associate, sort of venture or investment banking with, how do they make the most money? But you're not looking at it that way. You're looking at it, how can you find impactful companies, meaningful companies, which I think is, really a beautiful way to go about your approach. Do you mind just spending a minute or two telling us how you landed where you are today, right? In other words, everybody that's listening is probably connected to capital markets somehow, and they either want to know, well, how did that CEO get to be CEO? How did he get to where he is? And sometimes it's they start an idea out of their garage and a light bulb goes off, and other times it's uh, there's a lot of other routes to get there. Can you just give us a little bit of background about you and where you came from?
listen,
And how you
I have, I don't want to go too deep into personal stuff, but
no, no, no,
bottom line is that it's important, I think, and that, a lot of, uh, you know, uh, I started off life. My dad was a policeman. My mom was a Nicaraguan hairdresser. And and they're great. They're great people. I love my parents, but it was a tumultuous childhood. My mom was married 5 times. They never went to the same school 2 years in a row, so they call that childhood trauma, right? And and so what happens is you just, at a very young age, I had a desire to be fiercely independent, and because I wanted to be able to be self-sufficient. And so that, if you have childhood trauma, you either go to jail or you become a CEO, and that's kind of what happens in life. And
they should put that on a T-shirt, right? Those are the two routes that you have.
and my mom's still alive, so she doesn't like to hear me talk about childhood trauma. But I go, Mom, like, it was, put yourself in my position, right? It's like, and I love my mom, and I still hang out with my mom and whatever. But anyways, it was great. And what happened is that it essentially formed me for who I am. And what happened was I started off as a stockbroker. I just had serendipitous, occurrence with a fraternity brother that got me a job as an intern at Payne Weber back in the day. And I just fell in love with finding the next big idea. And so I did that. I got out, and then very young in my 20s, I started financing companies. So I started doing pipes before they called them pipes, and
Really? Wow.
I did my first IPO when I was 26 as a lead banker, and it was the first voice recognition company that came to market, and I took that public. And then we reverse merged and did another one for the first infomercial company, which ended up being a financial fraud. And so, I started off as an entrepreneur in the securities business, but I was always fascinated with leadership, and I saw early that if you become the leader in a new business or technology category, you do very well in the public markets, especially if that category could be very big. And so it was a very simple thesis. So I made enough money to start MDB when I was 32, and basically didn't want to work for anybody. And what I realized is that it was, reasoning from first principles, it was really simple. If you can stand up a leader in a new category, it'll trade at a big valuation in the public markets, and then it gives you the capital to be able to go develop that and hopefully get commercial and become a real company. And it was as simple as that. And we're still doing that same observation is the same thing that we're doing today, 30 years later, just, with a lot more experience and a lot more, back then there was no internet. And so back then getting to the truth was picking up the phone. So you got to get to the truth on these things to figure out if they can be the leader. And so I would just pick up the phone and call a leading researcher or person, imprimatur in the space, and call them up and say, hey, is this a stupid idea or not? And if they said no, I said, okay, do you want to join the SAB or be on the board? And if so, and then that just snowballed things, because then it became the leader, and we figured out how to snowball these things into being leaders. And it's not, what we do is not, um, difficult to get your mind around. It's difficult to have the discipline to follow through on the discipline, right? It's like everyone says, well, Warren Buffett is, what he does is not really difficult. No, it is difficult. It's difficult because he has the discipline to sit in there and sit with it and make really clear decisions and not, and overcome human nature, and
Let me ask you, I mean, discipline is a good way of putting it, but um, you have met hundreds, thousands of founders over the years. I've met a bunch, and I've also had the occasion, as you may have, to join some of these CEOs ringing the Nasdaq bell or New York Stock Exchange or OTC, and it's great that the confetti comes out, they pop the champagne, and in fact, they actually joke at some of the ceremonies that the louder you clap at the opening bell, the higher the price of the stock will go. I haven't found that to be true, but that's what they say. But what should these CEOs know that's real? Meaning, forget the confetti, forget the, hey, I'm on CNBC and Squawk Box. Like, what what do you tell these companies that you find? Because ostensibly, a lot of them are very early. They may or may not have ever considered an IPO. They never went to IPO school. So what should they understand before they go down that route?
well, I think first of all, um, you shouldn't go public unless you really have something differentiated and unique, especially if you're not, it all depends what kind of, success is situational. And so we just took for the first time our first profitable company public in January, company called Buddha Juice. And it was just serendipitous because a friend of mine is CEO of the company. And we were sitting in my pool in Nicaragua and he was telling me about he was going to do a private equity deal. And I said, I go, tell me about he was asking for advice. And he says, I go, tell me about your business. And he goes, well, we're doing this fresh juice, these big supermarket chains have fresh juice because it's too difficult. You have to juice inside the store and whatever else. And he told me how they overcame being able to do fresh juice because there is no such thing as fresh squeezed juice in these big mass merchandisers like Walmart. And I said, well, his name's Horatio. I go, Horatio, you're creating a new beverage category that doesn't exist. You could be the leader in this, right? And you have a very unique position with your partnership that you have with a very large company that is also a shareholder to where you could take this thing nationwide and be a very large company. And I said, I said, I've never met anybody that did a private equity deal that said, oh my God, those guys are the greatest people on the planet. I've never seen anybody that liked their private equity partner, right? So I said, if you could be the leader in a big, huge new category, why would you go do a private equity deal? Why don't you go public? And he goes, I could do that, because they're only doing like 11 million in revenue, right? I go, sure. I said, you can do it. And I went back and I go, I better make sure that we could do this, right? And so we started looking through, and this is where the microcap thing is really interesting right now, is that we started looking through and I did a screen. I went back to the office. I go, well, I screen every company making at least $1 million a year, growing at least, 20% a year, under 300 million in market value. And I was like, I wonder how many companies are and what they're traded for. So there was only 34, right? So I was like, there's nothing that's profitable underneath 300 million in market value. It's like, and the values of those 34 were very high. They traded at high values, right? Like I go, the market's starving for profitable small companies. They're growing because they're being valued well. Yet we've seen public listings go from 8,000 companies in 2000 down to below 4,000 now. I said, why is everybody doing private equity deals? Why is everybody, doing this? So basically, it's a long way of answering, which is do your work to make sure that you should be public, that you've got a story to tell. You got to get the narrative nailed. You go out and you tell the story, you refine it, you amend your business strategy. Your story is, intimately involved with your business strategy. Make sure it resonates. And I think the biggest thing that most, CEOs don't do is they don't articulate the vision for for the future very well.
That's
And so they're perpetually undervalued. Um, And what I've learned in business is that, that if you're perpetually undervalued, you're doing something, you're doing something wrong,
I I I I was just having this conversation maybe 2 weeks ago, and I'm curious your thought, if you could weigh in on this topic that you're talking about, of that the company has to have a great narrative, and sort of they need to be able to story tell. And what we find is that sometimes some of these companies, as I'm sure you've seen, the founder might be this mad scientist out of a lab, right, where you're getting deals from, or this crazy inventor with big dreams, which is great. But when it comes then to them being the CEO, being able to raise capital, or really tell the story, go to conferences and pitch, it's night and day in terms of capabilities. And the question came up, is as follows: is that if somebody is the CEO of a pharma or a biotech or even a med tech, do they have to have an MD after their name? Like, will people give credibility to the company if the CEO isn't a doctor or doesn't have the scientific background? I'm a big believer that as long as he surrounds himself with the right team, and he's an amazing storyteller, that's really what counts. I'm curious your perspective on that title. What's needed?
Yeah, I think vision and execution, right? And it's a team effort. It's not, a lot of times I'll inject the vision on all these companies because I can see things that I think other people don't see, right? And so the vision is important, but the execution is just as important, and that's not usually the same person, right? So great visionaries have a great bench of execution people, right? If you look at what Steve Jobs did, he had a great vision, but he had someone like Tim Cook and Johnny Ives that executed on really key elements of the business. And Steve Jobs was up front, and he was the guy that steered the ship to the right areas, but he had people that could execute. And I think that's where sometimes the CEO may be great from an execution perspective, but really horrible from a vision and messaging perspective.
Right, right.
And so you have to have both. Like, we have a company right now that we're involved in, and the CEO I love from an execution perspective, but he struggles to get people excited when he tells the story. And then he's got sort of a chief business officer that is great at telling the story. So you have to sort of, it's a team effort, I think. And you want the CEO to be able to be great at storytelling. And what I found is that, like, we have people internally in our firm that are really smart people, like, that I rely upon for strategy and understanding technology or whatever. But when they go to pitch it, even though they know it deeply, they just can't tell the story,
No,
you
I
know?
get that. I get that. I think that's a big part of the need for companies once they go public, right? It's not like, hey, we're public and now parties on, and the hard work is over. On the contrary, that's where it starts. Um, the value for your shareholders of the public company, um, do they get to participate in all these other IPOs that you guys are doing?
Yeah, so the visual when we took it public, there was a couple of companies out there that formed my thinking around this. So when my partner Anthony and I we'd run this company, we'd been doing this for a lot of years privately, obviously, and we had seen what, in the old days, Thermo Electron had done, and Thermo Electron had spun out like 39 new public companies out of a publicly traded company, very effectively. The Hatsopoulos brothers were great, and it was an accountant. One was an accountant, one was an MIT scientist, and they were a great team, and they launched a lot of really great companies, and they merged ultimately with what is now called Thermo Fisher. But those guys were unbelievable. I would call them public venture guys. And then after that, there was another company, and I became friendly with John Hatsopoulos, and so early in my career, and I think he's actually still alive, might be in his 90s. And then also another company called Safeguard Scientifics, which guy by the name of Pete Musser, and Pete, spun out the Internet Capital Group, and what they had done is they had actually spun out Novell, and they had taken Novell public through a spin out. And so they gave birth to these companies and then kind of spun them out. And that was sort of our inspiration because we saw that you could get a lot of leverage by building a community of stockholders around this concept of sort of launching big ideas, right? And so that was our inspiration. And so, that's how we got started. And the idea was is that if you owned MDB, you had first right to invest in all these spinouts, whether it be through a formal rights offering or just be through a traditional offering where you get your pro rata right to invest. And the idea was is that when things are great in MDB, all of our deals are way oversubscribed. We have way more investors than we have deal. And when things are tough, well, things are tough, and people don't. So since we've started, it's not like all of our deals have been oversubscribed because we've been in this downdraft of the microcap market, but we viewed it as a community, as a community of people. We've had 600 or 700 investors in our various companies, and we're trying to build that community, and get people engaged, and these people all help these companies, right? And so the idea was to build that family approach to it. It when things are going well, it's a strong family. When things are not going so well, people have other things to do, like buy Nvidia or something. It's like,
Right. I think it's great that you bring that sort of well-rounded approach, and I want to be mindful of your time and just to try to wrap it up. But I think that one of the things that I find fascinating is to say that you're saying to people, and I'm saying to the listeners, like, look at the track record. I think that's pretty unique, especially over the last couple of years where, dare I say, some of these companies go public at 5 or at 7, and 6 months later they're at, a dollar. To be able to have a track record that you guys seem to have, I think is a big testament to probably the hard work that goes into it, in order to decide who to be working with and who to invest in. Is there anything else about either MDB as the company or as the public company that you think people might find interesting, or that you'd want them to know about?
well, I think what people don't realize is the team we've built, that actually goes out and finds these things and help put them together. I'm on the front end of it, so people see me sometimes more often than our team. But all the way across the board, we have a really wonderful team of people that make all this happen, and a lot of that team is based in Nicaragua. We've trained a lot of people. A lot of our back office is there. We do accounting. We actually do accounting for small public companies now, because they're having these small public companies are having a hard time finding accounting talent in the U.S. currently, and then we help them to write their S1s. So we're
I didn't know
helping.
that. We have to offline. We got to talk about that another time.
Yeah, no, you got you and Shire in the service business,
Yeah.
right?
We work with about 1,000 public companies, so we'll
Yeah,
talk about that.
yeah, no. So we really help, for a company like Buddha, which we're now expanding into companies that we think could be leaders that are not necessarily deep tech, where we're not necessarily founding the company. We're expanding and saying, listen, our investors want to invest in the leaders of tomorrow, even if we didn't grow it up from nothing. So we have a team that can now put together companies and take them public. And I think there's a lot of companies that should go public, that have not thought about going public. Um, and so I think that's one of the other things that's great. And we have a great team of people to help make that happen. And when I was in that swimming pool with the CEO of Buddha Juice, it was about a year later, we did the IPO. It would have happened faster, except for the fact that the government went on strike for a couple months, and
Yeah, somewhat out of your control, but I can attest because we've had a chance to work with a bunch of people from your side, whether it's Tony or George or whole bunch of different opportunities over the last years, and they've always been great and professional and responsive. Um, and so, if anybody wants more information about the company or the opportunities, or if they've got a company they think could go public, it's mdb.com is the domain, mdb.com. Thank you so much for this discussion, and thank you for the time, and we wish you continued success.
All right. Thanks, Seth.
Thanks, Chris.
Bye-bye.